There's also one more, Sarda Energy. Now, the stock is under pressure, but here the numbers were actually fairly good. The company's EBITDA rose by 103%. The profit after tax was up 76%. But the stock, as you can see, is under pressure, but that's the market for you. PK Jain, Director and Group CFO of the company, is now with us on the show. Mr. Jain, thank you very much for joining in. First, we have the reported numbers, but there is that contribution of the acquisition of SKS that you did. So what was the contribution to the revenues and EBITDA because of SKS, and what would the numbers look like if you strip that out?
Yeah, SKS this quarter has got the full effect, and in EBITDA it is a little less than 50%. But that includes the effect of the coal mines also, because the coal is provided from our own captive coal mines. So in the EBITDA level, before depreciation, interest and depreciation, our contribution of the SKS power plant is little less than 50%.
Okay, and on the top line, your top line was about 1,310 crore. How much of it was incrementally because of SKS?
Top line is about 35% is from the SKS.
35%.
So the other question we want to ask you, Mr. Jain, is that when it comes to SKS, what is the full capacity when you acquired? What is the current operational capacity, and what is the capacity that is left to be operational? And post operationalization of all of the capacities, what will be the quarterly EBIT run rate from this particular from the power business?
We have acquired a power plant having 2 units of 300 megawatt, and that is the present capacity. Capacity is fully operational, but because it was under IBC, so proper amount was not spent on the maintenance of the plant. So capacity utilization was lower. Gradually it is improving. And in the month of January, we have achieved 97% of power load factor. And we expect the annual power load factor to be normal in the next financial year. We should be able to achieve somewhere in the range of 80%.
So which what is about
yeah.
Sorry, go ahead.
The total generation capacity is 600 megawatt, which is fully operational as of today.
As of today. But in Q3, what was the capacity utilization, and now that in the December quarter, what was the capacity utilization, and now that it's almost 100%, what will be the incremental contribution to the margins? Yeah,
in December quarter, it was somewhere about 75%, 73-4%. And
so as it goes,
annual capacity should go above 80%, somewhere in the range of 80% plus minus.
Okay, Mr. Jain, let's now talk about the iron ore pellet as well as the sponge iron business. Give us a sense of the prices over there. Give us a sense of the realization trends that you've seen. What is the volumes you are penciling in for FY25, and any initial estimates that you've made as far as FY26 is concerned?
So far as pellet prices are concerned, pellet prices have improved a little from the third quarter average realization. We had an average realization of, I think, 9,100 plus. Now it is hovering in the range of 9,700. And in case of other steel products, billets, sponge iron and wire rod, etc., prices are hovering at the levels at what we achieved in the quarter 3. So except pellets, in the steel prices are more or less in the range where it was in quarter 3. So far as ferroalloy prices are concerned, ferroalloy prices have moved up post quarter 3, and realizations are maybe 10 to 12% higher than the quarter 3 average realization. And so far as volumes are concerned, we have not carried out any expansion in last 2-3 years, so volume will remain more or less stable, except a little bit improvement on account of the efficiency improvement steps taken by the company.
So do you want to put a number to the volumes for FY25? What could it look like for iron ore pellets and sponge iron?
Iron ore pellets, somewhere production should be somewhere in the range of 8,20,000, more or less in the range of the previous year. In case of sponge iron also, it will be a little bit higher than the previous year. It should be somewhere in the range of 3,25,000. And in case of steel and wire rod, it may be a little less, because we have been selling power whenever we are getting better realization on the energy exchanges. So to that extent, the production of steel may be affected, but it will not affect margins. It will improve the margins because we are selling power at a better price than what we realize from production of the steel.
Understood that, sir. Mr. Jain, could you give us a sense of the demand trends, especially where will you end FY25? You did give us a sense that you're expecting little improvement in FY26, even though you've not really added capacity. So give us a sense, number one, of the entire volume trend, and number two, how do you expect EBITDA margins to move from here on, especially in the consolidated space with the addition of the power business?
Yeah, at consolidated space, the EBITDA margin must improve because volume-wise also there will be few more additions. We are starting the one hydropower project by the end of the current financial year. We are also completing the mineral wool project by end of this current financial year, and we will be starting production from our new coal mine, Garapalma 4/5. So all these things should be able to add to our EBITDA levels for the present year. And SKS Power also, this year we had only for 7 months. Next year we will have full year operation. So that should substantially add up to our EBITDA levels from the current year.
We leave it here. Mr. Jain, thank you very much for joining in. Out of time on the show today, but all the best.